Welcome to the AccendoTraders group. This is our video trade plan for Wednesday, April 16th, 2008. AccendoTraders.com, effective trade plans delivered daily. And you guys know by now what we do. Here's our routine for tonight, our aftermarket routine. So today in the market, we had some inflation data that came in higher than expected year over year, but we had some good earnings from Johnson & Johnson and USB Corp topped their earnings, so that's really what spiked the market. The market was flat, and then kind of pre-market went up on the Johnson & Johnson earnings, and we had some other news. And then in the day, one of the things that is being associated with why we had a midday rally off the lows was the CEO of Lehman Brothers said liquidity is not a concern. Crude, most of the sectors are positive, and there's what our major index did for today. Again, USB and Johnson & Johnson beat earnings. Upgrades, we had FCX, Me, and the only reason I put Me on there is because of coal, and we've liked some coal stocks. And then the builders get some mention again today for upgrades, which is interesting. Crocs, I only mentioned Crocs because Crocs used to be the darling of the market, and then it split. And not to say the split's the only reason why it's not doing anything now, but that's when it all went downhill. RIG, we remember RIG had a great day, so we unflagged it. And then Google was placed as a hold, and that's ahead of the earnings that they have this week. Tomorrow we've got more inflation data coming out, housing data, weekly crude, Fed base book. So we have some, definitely again this week is full of information, data to move the market. But before the market we have JP Morgan, and I really think that that's probably going to be the big, sort of like Johnson & Johnson today. JP Morgan and Wells Fargo have news earnings before the market with all this liquidity concern and credit crunch. And the Bear Stearns deal, I think JP Morgan is going to have a lot to do with what happens tomorrow. And you can see IBM has earnings afterwards, and we still have our 2-for-1 split for CLF. Let's look at our flag list. Okay, so here's our NASDAQ as we go through our flag stocks. And you can see we had a little bounce here today. And the reason you see all of these candles today with all these huge wicks is that we did gap up, and then we fell down, and then we rallied for the into the close. So that's why you see wicks to the bottom, is that we had a gap up, fell hard, and then eventually we finally found a bottom right around support where we thought we would, and we rallied up for the rest of the day. So it's not bullish, it's not bearish, it's a sideways move. We'll see if that can hold up tomorrow with the earnings coming up. And so here's AGU that we talked about, but with that gap up, this is now too far away, so we're going to unflag AGU. Amazon, still trying its best to set up for us for this falling tree pattern. We said the safer play was around 71, and even though we got the alert, let's go ahead and keep Amazon. Keep your alert at $71. Here's APA, even with the gap up, with the pullback, still kind of like it. So I'd probably go with the alert around 137. ATI, kind of fooling us here. It broke that key support, but look where it closed, right on that support. So let's reset our alert for today's low for ATI. BTU finally jumped out there, probably off that alert on MEE. Probably on that alert. So this is one that's going to fall in the category of, is it safe to get in tomorrow? No. But we'll keep it flat because it's moving nicely. And here's CAT. We thought we were going to get a below the 50. At this point, we're going to unflag CAT because we did not get that confirmation of our down move. Maybe tomorrow. We'll see. CENX, we talked about bracket trade on this one, and it's still looking the same. I would reaffirm our alert at 67.50. And we still have our alert up here for 72. CF, kind of same thing. Gap up and pull back, fine. Put your alert right around 145. CLF, another gap up and retrace, good. Same thing. Put your alert at the high of yesterday at 149. CVX, we finally did break out of that consolidation again. You can see we've got these wicks here. So put your alert right around, I would say 90.50. His DVN gave us sort of a weird doji thing going on here. Let's go ahead and continue to put our alert right around 114 in this wick. We'll keep it flagged. LVS, look at that push down. Look at that push down. It's moved too much now. Unflag it. MBT, still hovering at support, so we'll keep it. Mosaic, nice stock. Another sort of not as drastic of a gap up and pullback. Alert at today's open at 128. MTL, definitely showing some weakness now on MTL. And they signed some deals today. We'll give it one more day. One more day. Keep your alert up at 152. NOV still hovering at this resistance level, so keep your alert around 70.50. NYX didn't quite get it today, and we got a tweezer bottom now. So keep your alert around $64 for a push lower. Still got a rising 3 now coming on OIH. Keep your alert at 194. Steel Dynamics. We said it would bounce there, and even though we didn't get a big candle, there it is. The stock still can go either way. Bracket traded above today's high, below today's low. USO, wow, look at that. Remember, oil touched the all-time high today. Unflag it because it's moved too much. There's X, still keep your alert. Right about today's open high of today. And finally, XOM, put an alert at today's high. Okay, so now we're ready to move on to our educational portion of our podcast. And this is a study of the shift fundamental analysis, Trading in a Zone by Mark Douglas is the book. And yesterday we said the best traders can put on a trade without the slightest bit of hesitation or discomfort. And more importantly, they do not allow this discomfort or they do not allow any negative emotions into their mind as they focus on making a trade. They stay disciplined and they don't lose their focus. So the question is, obviously, are you able to trade without this emotional discomfort? Are you able to accept the risk of trading? Are you able to accept the fact that you may lose the money? And Mark Douglas goes on to say that the big problem, this is a big problem because to whatever degree you haven't accepted the risk is the same degree to which you will avoid the risk. Meaning if you haven't accepted the risk, then by avoiding the risk and going through that same length of avoiding risk, that also means you're avoiding a trade because I don't think so. And so instead of getting in a trade, you talk yourself out of it. Trying to avoid something that is unavoidable will have disaster effects on your ability to be successful. Obviously, trying to avoid risk in a market that is risky is just crazy, but people don't think about it that way. They're not associating the fact that they may lose their money in this trade. They're not willing to accept that they may be wrong. So obviously, why don't we want to accept the risk? Why don't we want to accept responsibility for our trading? Why do we blame others? Why do we blame stock pickers? And why do we blame instructors? Why do we do that? Obviously, losing money and being wrong ranks at the top of our list. So we do employ systems. We do employ instructors and stock pickers because we don't want to be wrong. Now we can say they're wrong. Admitting that we're wrong and losing money is even worse than being wrong. So if you employ these other people, you can at least blame them instead of blaming yourself. So once again, as traders, we are confronted with these two possibilities of being wrong and losing money every moment that you're in a trade. So until you come to grips of accepting responsibility, and again, I am not saying not to use these services. What I'm saying is that they should be a part of your trade plan. They should be a part of your system that you make educated decisions upon what's best for you and your family, what's best for your account. And when you take that responsibility of analyzing what people give you, analyzing what you are able to see with technical analysis, and when you take that responsibility of saying, this is what I see, I'm going to place on this trade, and whatever happens, whatever will be, que sera, sera, that's when your trading will take off, when you're able to accept that responsibility of, no matter what happens, this is my system, and I'm ready to move forward. So there it is, podcast version, which is the full version for our YouTube folks. And obviously continue to provide us feedback, and please trade at your own risk. Thanks, guys, and I'll see you tomorrow. Watch for that JP Morgan and news before the market, and we got that inflation data before the market. See you.